Good evening, guys. Ken at Tortoise Capital. This is the Friday night strategy podcast for February 19th, 2021. So for those of you, keeping track at home, this is a sequence that I go through when I'm reviewing the weekly market. Something you could do is like have a structured note sheet like this that lets you track symbols of interest. You might drop it into, if you put it in Excel, you could line it up so you had all the symbols neatly organized, whatever, or you could just pencil it in as you go. But this is roughly the order that I follow, where I'm taking a look at the market conditions on the once a week report, on the weekend report. I'm looking for, the broader movers. And then I move into the daily report where I'm looking for information about the sectors and swing trades and day trading targets. And then on the intraday insights, I can drill a little bit deeper if I want to do additional research on a symbol to get some of the key price levels and things like that. But this is that structured approach that I take. You might want to grab a screenshot of it, and I will put that in the on the Patreon as a download tonight as well. All right, so let's take a look what we had today. So today started off pretty well with a nice gap up out of the dragon. But it couldn't hold that going into the weekend in the broad market. Although I will say that the disruptor portfolio really crushed it today. There was a lot of strength in the in the disruptors, and so while the markets in the large caps in the U.S. were weak, the small caps and mid caps and the high-tech disruptors all did really well today to go into the weekend, including Bitcoin. Had a really nice, strong day. So that looks very favorable. For those of you that have Bloomberg TV, there is a very good hour-long interview with Chamath of Social Capital. I'll get his last name wrong, but Chamath. I think he's the modern Warren Buffett. He's an enlightened social capital investor. That's the name of his company. He's working through Social Capital 3.0 in order to create an investment framework modeled, I think, after like Berkshire Hathaway, but for the masses, to support his vision of equality in the world and climate change. And that's part of his fundamental and strategic outlook on companies. They first have to meet one or both of those objectives in their vision and mission statement, and then the numbers got to work right to be a value investor in those areas. And so he's another guy, much like Kathy at ARC, that I think deserves to be reverse engineered. So we're going to get him and his portfolio added to the disruptor portfolio so we can make judgments independently about the targets that he selects. He's worth about $20 billion, and he's fearless and honest and transparent. And the interview with Bloomberg was just really well done. I'll see if I can't find it on YouTube and post that, but it's well worth the discussion. I'm making sure my son listens to that too, and my daughters, because I want them to understand what that vision for the future of social engaged investment looks like, and how to stay in front of the waves of change. I think that highly of his work and his attitude. So full respect to him. All right, so we have the dragon starting to roll over and almost get flat in the slope in here. And the slope of the 30 has flattened a little bit. The PSAR is relentless. its stop on Monday will be 385.50. Fair value has moved all the way up to 381 1/3, halfway to Z0. The RL10 is still in the summer. It has rolled over, though, and crossed the baby dragon. Still north of the dragon, so that's, fair and good. But price did close right at the bottom of the dragon. So to me, Monday, this looks like a nice critical state, like right in here. Like if that breaks below and back into the river, I think there's a tactical trade on the downside. Come on, dummy. See, I think there's a intraday tactical trade available right in here. And then if that were to break, it's 2 scoops. And then if it breaks the PSAR, 3 scoops, because then you'll be at 2.5% sell-off here around 384. And then if it breaks through the Bollinger Band mean, then down it goes. And it's going to come all the way to here. So those 3 positions there intraday would let you take advantage of a sharp move. I think that is less likely given the outperformance of some of the the disruptors this weekend. But the broad index itself gave back a little bit today. It did not finish strong, but the fact that it didn't panic sell, I think, is a plus. But I'm a little worried about this. And now our 10-day range is pretty tight in here. It's only 1.61% for that yellow zone, whereas that 30-day yellow zone is like 6.3. So that's kind of the normal business right there. When you see the, earlier, last week, we saw that the 10-day range was most of the 30-day range. And so this is getting back to something like a normal condensed. In fact, this is almost just like this is just a little bit more than 1 ATR inside of that yellow zone. So this move from here into here is really only one ATR, a little bit more than 1 ATR. So that's how tightly compressed this has been. So I really do see an intraday trade starting with a really tight framed box there, and then I would take probably I would want to see it get above the daily high versus this like about a 2.5% sell-off, and that would be another maybe hourly breakout box, and then certainly the 10-day breakout would be another. You'd be wanting to get long, I think, here. I think a second one here, then the third one by this price level, and then off it goes. So I'm cautiously optimistic, but anytime I see us in this land between the this range in here between the RL30 and the PSAR, that's kind of danger island there, that little funnel. Longer term, this was solid. I think for 10 days we've been able to resist this kind of a sell-off here. My worry was when this thing peaked in here and we got that sell-off like that. I have been really worried about getting another one of those once this started selling off from here. But so far it hasn't. So my worry is this return down here to the to the bottom of the river. If that were to happen, then this little series of short side positions that you could build up intraday would allow you to exploit that. But the fact that this thing instead, turned the corner and rolled up a little bit is actually a favorable thing. So we're within spitting distance of that all-time high. So I'm actually, I was pretty happy with today's price action. And then with the disruptors leading the way, that just says that the momentum traders, the enthusiasm in the market is there in full-throated support along with the cryptos. So I'm cautiously optimistic, leaning forward. All right, so the S&P was basically flat today. Okay. So here's the S&P at minus 0.2. The diamonds minus 0.2. The Qs down 0.44. Treasuries off 1.33. They're just getting smashed. Let's see which one would we listen here. Need some IWM in here. That was actually pretty good today. There was our completion ETF at 1.68 and the Russell at 2%. So this was a clear kind of old school, new school. The aggressive plays were getting it done today. Emerging markets split the difference down here at 0.65. So I really take this as a positive sign for the broad market. And again, DWSVPF gives you the mix of the smalls and the mids. That ETF plus SPY gives you the total market index. So that's like the rest of the market there. Now let's see the things that worked today. Tech was marginally better. Lithium basically flat. Japan and Brazil up 1/3 and 2/3 respectively. Silver up 0.8. Finance and the FANGs up 1.2. ARC Genomics and S&P Biotech 1.6, along with energy 1.6. Materials 1.8. There's ARC Innovation. Anytime that's better than the Qs, that's a good thing. 2.3. Oil exploration 2.6. Commercial real estate 2.7. Clean energy 2.8. Marijuana 4.4. Ethereum 4.6. Space 5. Blockchain and GBTC smashing it. And then just noticing, the companies that did really well today. Alcoa was ran up like a young person today. It was amazing. So Alcoa up 9.5. U.S. Steel and Caterpillar up 5. Nikola 5. Boeing 4 1/3. Cliff 2.5. Square 2.1. Where's my PayPal in there? Yeah, Devon Energy 1.4, Neo, Nvidia, Apple up. I was expecting more from Apple today. Didn't get it. Things that underperformed. Here's Mexico minus 0.5. Consumer discretionary 0.6. Healthcare and staples 1.3. There's PayPal. Oil 1.5. and VIX 3.6. I take that as a positive sign. My hedge is long over on that one. Wasn't needed. It was needed at the time, but it wasn't used. All right, Amazon down 2.3 for the companies. PayPal 1.3. Microsoft and Tesla down 1 and 0.8. Wheaton minus 0.4. So only a few things lagging today. And I just want to really highlight the reason to pay it. It's not always just disruptors. Sometimes it's just great American companies when it's their turn. I mean, Alcoa, for crying out loud. That's the daily on Alcoa, and you can see how that broke out of the base and crossed the dragon with power. And the intraday move was just off the chart good, right from the get-go. You get a nice gap up, and it never looks back. Bitcoin was the same. I mean, that's as orderly as you want, isn't it, for intraday? And same with blockchain. And same with Ethereum. Not quite as good, but still pretty strong. U.S. Steel giving you some early indications, along with broad materials. So finding the movers and staying with them. And then the Russell, as far as the U.S. indices were concerned, just right from the get-go. You will notice that COTA 2 entry and a second entry. You know, here's a COTA 2 for you. Here's a second COTA 2 entry. Right there in that nice little elbow. That resumption when it is gaining traction. And yes, for those of you keeping score at home, that's another one. And if this little touch of the Bollinger Band mean got you out, then this one should get you back in. And it wouldn't be a day on the Russell without some intraday reversals. But there's a supported spring crossing for you. And a COTA 2. You can make a living just specializing in that. SSC plus COTA 2. I mean, the least surprising behavior is after a run-up like this, and it pulls back to the VWAP and holds with a higher low and a COTA 2. That's the no-brainerest entry of all. And you're hoping that it just comes back and retests this, and it almost did. But still, you're not going to lose money on that trade. Unless you stay too long. All right, let's run over to the weekend report. Okay. All righty. Let's go. There we go. Page. Okay, so this is the weekend report for February 20th. Bullish quiet, overbought long term, a little bit of weakness on the shorter term, but a nice recovery today. Still risk on in the risk Z. ATR is about 1% now, which makes it quiet. Previous hump, it rolled over at Z2. Now it's rolling over at Z1 in terms of the risk Z. So we're cautious about it. You know, it can certainly come back to here and to here, but we'd also like to see it resume and get some strength and go that way. That'd be nice. All systems go in the blended monthly rebalancings. We're getting close to that 10% exit in PBW. But the leaders still remain the leaders, with maybe the exception that you replace an ILF with EEM if you were going to change horses in the middle of the stream. +1 if you know that Tower of Power reference. Monthly market, all systems go. It's voting to the upside. It cleared the previous month, and we're building strength above 390. To me, I can't let it go below like 375. But we have a nice PSAR recovery. We've left this indecision zone behind. The last time it did that, it was like this, and it gave us 4 months of gains before it cracked. In this indecision zone, 4 months, and then 4 months of gains before it cracked. So we're in probably the third month, you know. So caution, but another 6 months of gains would not be out of the ordinary. On the, let's see, I'm going to throw this 9-day in here. So I normally go monthly, weekly, daily, but Bob Rourke and I have been looking at this 9-day, which is almost 2 weeks. And it gives you a really nice intermediate orderly move. And man, when that PSAR flips, you really like that, because there's a Kata 2 entry right there for you. And that's not bad. That gives you a very smooth, like almost basically a 2 week view. Note the fractal nature of the framework. On the weekly, you kind of get the same thing. This was a little troublesome in here because the price violated, but the RL10 did not. So that's actually the learning point, is that you got to watch where the RL10, and when it reverses. So even if this price got you out because you were concerned about the volatility, when the RL10 doesn't even get through the dragon but then reverses to exit, you got to re-enter. So I don't mind you taking a tactical safety valve right here, but you have to get back in if you're gonna play it both ways. Okay. And this still feels pretty good, but nevertheless, my stop on this term would be at about 384. It's about 3%. That's 3 ATRs. That's plenty of room. I then did an intermediate between the daily and the weekly and the powers of 3. So if I like 9 for the longer term, I said, let me see what a 3-day looks like. So that's a smoothed a smooth chart. It's faster than weekly, slower than daily. I kind of really like that. I like it's got a tighter integration inside here for the PSARs. They're quicker to reverse and go, and you still get a nice reentry, and it keeps you in for the bulk of these moves. I mean, that's pretty good right there. And just notice that all of the indecision happened at previous highs around that price level. But kind of once it gets out of that, once it gets beyond the Z3 of the previous excursion, this has been nothing but good right here, right? So I would just draw your attention to that and say, where's my sheep? If you notice this price level here featured a Z3 excursion right here, right? So what that means is any price beyond that would be considered exceptional. So now, once that clears this price level here, that's the indicator that this has some legs. And then the next one, the really big one, would be this, when it gets above that Z3 line right there. So that's the 3D. I kind of like that as a smooth look. And we've already seen our daily. That gives us all the tactical ideas. I'm really strongly in favor of this. A stop here, 388. I don't see any reason to stay longer than that. For the swing guys, yeah, I could see maybe if you wanted 383 and the Bollinger Band mean, but still, to me, this higher one, I want to preserve more of that move but on my shorter term outlook. IWM gave back a little bit, but is clearly the dominant player inside the stack of 13 ETFs. MDY is pretty good. And emerging markets, that's your three-headed monster of love. And treasuries, just no love whatsoever. In ETF 22 portfolio, you have the energy and finance, like we talked about last week. We were well positioned for that, and we're able to take advantage of that play. And then materials with a surprisingly strong week as well. In the ETF 32 portfolio, this is we've been given a warning on this for over a week about trouble in clean energy and it cracking, and now it's starting to show some real weakness in here. But oil exploration, energy, and finance really standing out from among the crowd. In the Dow 30, Goldman and Intel, JP Morgan and Caterpillar and DuPont. So that's finance and materials really crushing it. I think Verizon is an anomaly, but that's what bottom feeding may lead you to. It's been in the red for so long compared to its peers, but now is yellow and now is green. That could be like a swing hook from drastically oversold conditions. Worth taking a look at for the value players. In the sector spiders, the expanded sectors, energy, doing well. Regional banks, metals and mining, big banks, energy, and financials. The fact that transportation is doing well is good from a Dow theory kind of perspective. That's good. Oh, yeah. You'll notice that all of the clean energy guys got smoked. The clean energy fund here. The U.S. surging back into dominance here with the small caps and mid caps doing well. The Dow lagging a little bit. Commodities and oil both doing well. So this is not just, DBC includes grains as well. So the agriculture is actually doing pretty well. A lot of the grains are in times of scarcity, and China's making big moves to lock up as much of the food supply as they can right now because of poor growing conditions globally. Otherwise, U.S. small caps really just leading the way, you can see here. And the S&P at 28 is still lagging a little bit behind the Euro-Asia. Two new players in the green and white. That's Vanguard Small Caps and Taiwan. Green and white is a leader. Green on strength, white on consistency. Was good, is now great. Consistency was good over the last 10 weeks, and now current week it's green, so it was good, now great, and it may be a possibility to exploit new strength. And it can be turboed because it's the momentum of new leadership. You're also seeing that with the S&P 400 mid caps, whether it's the iShares or the spiders. And financials also doing really well. XLF doing well. For shorter term trading, you want both liquidity and volatility, so that leads you to energy and silver, Brazil, semis, biotech, gold miners, and oil exploration. All pretty good. Shifting to the daily report now. Already seen that one. No new signals in channeling and overreaction. You got DuPont, Goldman, Intel, Morgan, and Boeing. Walmart and Apple remain, I think, value plays. I will continue to believe that. Tesla in the value stack as well, along with Cisco and General Motors. Just a handful of dojis here, 3 of them. Quite a few breakouts, however, in American Express, Caterpillar, Goldman Sachs, and DuPont, and JP Morgan. That's just the strength in that finance sector, really getting it done. Cisco's very interesting, channeling and overreaction and 2.7 to 1. On the auto framer, Disney at 4.3 to 1. Walmart, I just think, don't you have to own that if you're a big fund manager? So people start buying Walmart pretty soon. Still recovering from that bad earnings. But it started today. They were up 0.5%, so I think it's safe to buy them. And you've got a moment of advantage on the 10-day high is 4.3 to 1. Why not? In the ETF 30, I should say. Treasuries, how many times we've said this the last year? Treasuries just getting smoked. Nobody wants them. Breakouts in finance and industrials and materials. And metals and mining. Just a few channelings to get our attention in the sector spiders of staples, utilities, and healthcare. Not really interested in them. I would much rather exploit strength in the Russell and the S&P materials while they're working. All right, a couple good value plays stick out to me on the auto framer: Walmart, Apple, 3.5 to 1. I'll just keep saying Amgen until it works, and I'll say, see, I told you. Cisco, 2.7 to 1. Our daily squeezes. There's Amgen, Walgreens, Disney, and Apple. There's Apple again. I just think that's the winner. And here's our framing data. Still being dominated by the summer on our MACDs. I like emerging markets early in the summer. Asia less Japan too. The fact that IWM is still in the fall says there's room for it to grow. Like it's not too late. See strong presence of the financials there in the multi-time frame NDX with Goldman, American Express, JP Morgan. And then the usual suspects, once again, industrials, energy, materials, finance. And only the defensive plays getting smoked, plus Mexico. All things normal in the market, and otherwise that looks pretty good. I will say in this little experiment, the RL10 has now come all the way back to the middle of that yellow river there, and it has resisted that urge to fall all the way to the bottom there. It's not impossible, but we'll see from that critical state on Monday. But I think I'm betting to the upside, and led by the disruptors, energy and materials. Okay, and probably finance too. All right, that's everything I want to cover for tonight. Tomorrow morning, 8:30 for the True Story telling folks. I'll send the invite out. I'll post it on Patreon too. And then the online swing on Zoom at 7, and the review of the swing portfolio in GoToWebinar at 8. And that's everything I got for you tonight. Stay safe, and you guys take good care.